a lot of people believe that the way that we're taught right now of going to school, getting a job, saving in a 401k or IRA or any kind of qualified account, that is the traditional way of investing and saving for our future. But I'm here to tell you that that is what is kind of programmed into people's brains right now about how that is traditional. Couldn't be, it's anything but traditional. That's the reality. 401ks are about my age, right? I'm 42, I'll be 42 years old in a couple months, right? And so we're hitting the first generation of people that are hitting retirement where they relied on 401ks and qualified accounts as the foundation of their entire retirement planning strategy, and they're coming up short. They literally are 95% of the people are hitting retirement age or are not on track to be able to maintain their standard of living when they retire. Now, I don't know about you, but when I look at those numbers, hey, what's going on, cash flow hackers? It's Chris with Life 180. And for this video, I want to talk to you about how to use whole life insurance to get rich. Now, I know that sounds weird. And I know that maybe seems a little bit out of alignment with how I normally talk about whole life insurance, but here's the bottom line. You know, we go around the world and we look at people online like Dave Ramsey, Susie Orman, you know, there's other, you know, kind of quote unquote financial experts out there who talk about life insurance, whole life insurance specifically being a horrible investment. And, you know, it's interesting. I've done videos on this and I've talked about the fact that, yes, I agree with them. Whole life insurance is a horrible investment. So if that's the case, and I'm saying whole life insurance is a horrible investment, well, how could a horrible investment get you rich? Well, it's because life insurance, when designed properly, isn't an investment and shouldn't be looked at, viewed, utilized, leveraged, or any of that nature, used as an investment in any way, shape, or form. When you understand what whole life insurance is, when you leverage whole life insurance as it's meant to be leveraged in a way that will actually help you achieve your goals, you have to look at it as what it is. It is a savings alternative. And what I mean by that is a savings alternative, we think about it this way. When we think about an investment, the difference between saving and investing is just a function of risk, right? Like in an investment, you have the opportunity or the danger of losing your money, losing capital, right? Like we all know if we invest in a stock, we hope it's going to go up, but there's a chance it goes down, right? But when we put money into a savings account, we know that that money is locked in and guaranteed. It's got FDIC insurance, all these different things, right? And so we know that that money is guaranteed. But here's the problem. Right now, we've been living in this low interest rate environment for a long period of time. And the problem is because we have inflation at 7% and you can only get 0.1% of earnings in your savings account traditionally, or like typically for most people, you have a problem because your real earnings in that money or in that account are negative 6.9% if you're getting 0.1% return. What does that mean? That means that money is becoming less and less valuable, meaning you're losing purchasing power for that money every single year. So it becomes this function of risk reward, right? Do I want to keep my money safe, liquid, accessible, controllable in a bank account, like a savings account? Or do I want to take risk and try to get a return that's going to beat inflation, right? It's kind of scary right now that people are trying to chase 7, 8, 9, 10% returns, but you have to get a 10% return in the market and take on a significant amount of risk just to have a real return of about 3% considering purchasing power and like the actual increase of the value of that money, right? Like, because if it's 7% inflation, 10% minus 7 is 3%. So, you know, that's something, the real value of your money, you have to take inflation into consideration. Now, when we look at life insurance, when we look at a properly designed life insurance, how do you use it to get rich? Well, the way that I like to describe it is when we utilize whole life insurance as a savings alternative and we don't think about it as an investment alternative, we realize that it really sets in place for us a set of rules. And it's more of a financial system that we're able to run every dollar that we save through. And it basically is a filter. That system becomes a filter to help us make our financial decisions, right? And that's a beautiful, beautiful thing, because that's one of the biggest challenges that I find that people have in this world when it comes to their money is they don't have a decision-making process when it comes to their money. And when you have this process of saving, into a system, and that system helps you make these decisions based on a set of rules. Well, now that on its own, I'm a big believer of the phrase, anything measured improves. It helps you measure things in a different way, helps you make decisions in a different way. That's going to help you be more successful. Rate of return, everything else, aside from the point, just being able to be better with your decision making is going to make you more effective and efficient with your money. It's going to help you become wealthier with less risk. That's the first thing. Now, the other thing that I want to talk about in this video is the importance of saving, not investing. One of the biggest challenges that people have in this world, I think one of the biggest reasons that people are failing now is because traditionally speaking, well, let me say it this way. A lot of people believe that the way that we're taught right now of going to school, getting a job, saving in a 401k or IRA or any kind of qualified account, that is the traditional way of investing and saving for our future. But I'm here to tell you that that is what is kind of programmed into people's brains right now about how that is traditional. It's anything but traditional. That's the reality. 401ks are about my age, right? I'm 42, I'll be 42 years old in a couple months, right? And so we're hitting the first generation of people that are hitting retirement where they relied on 401ks and qualified accounts as the foundation of their entire retirement planning strategy, and they're coming up short. They literally are 95% of the people are hitting retirement age or are not on track to be able to maintain their standard of living when they retire. Now, I don't know about you, but when I look at those numbers, to me, that's a scary statistic. And that's telling me that the financial system is failing. When 95%, when you can put that high of a percentage of the population into a grouping of people that are struggling, to me, that tells me it's a systemic problem. It's not an individual problem. Yes, people need to learn how to manage their money better. They got to be more disciplined. And I've got, plenty to say on that for another time. But the bottom line is when it's that high of a percentage, this is more of a systemic issue. So what we need to do is kind of think about what was happening before we were relying on 401ks. I don't know if you know this or not, but when I talk about utilizing whole life insurance as a savings vehicle, up until the 70s, over 65% of the people in this country actually saved money inside of whole life insurance. Think about that. People ask all the time, all right, well, how is this the case? How are people saving in life insurance? And, how are they able to do what they do? How are the tax advantages the way that they are? All these different things. Well, you have to look at history. I'm a big believer. History has a habit of repeating itself, right? And so if you go back and you understand the history of banking, the history of the Federal Reserve, the history of life insurance companies, the history of our country, life insurance companies started in the United States in the early 1840s. So think about this. That was 20 years before the Civil War happened. And if you talk about the companies that we deal with, these insurance companies have never missed a dividend payment through the Civil War, through all the depressions, all the market crashes, the fact that we've gone through a couple different dollars. There's been different amendments on which dollar we're going to use. I've done some videos on that. That we had the Great Depression, we had World War I, World War II, the Korean War, we've had Vietnam, we've had the Cold War, we've had the fact that we ran into massive inflation problems and we had a crash in 1980, we had the dot-com bubble, we had the Great Recession, we had COVID. All these years, these companies have made dividend payments and they've never missed a dividend payment once. And that's why I tell people life insurance companies are the master managers of risk. And the reason I'm saying that is because 2009, for example, over 560 banks failed, right? Think about that. During the whole 170 years or whatever of life insurance companies doing this, one real mutual company has actually failed, right? Just one mutual whole life insurance company has failed. Think about that. There's a reason that I'm so bullish, on this strategy and why I think it's so important. Because I think the environment that we're going into right now, it's more and more important for people to do this strategy now than ever. And I've got a lot of reasons for saying that. But so getting back to how does whole life insurance make you rich? Well, it's going to give you a set of rules on how you make your decisions. It's going to put you in a situation where you have to, it's a forced savings plan. It's going to put you into a place where you're putting money aside. And it goes back to what I was kind of going to get to a second ago, where the biggest mistake people make is they invest too young. They invest before they save. And when you invest too early, you're taking on too much risk too early. And when the boom bust cycles happen, you may feel good for a decade, but when the economy, goes bust, which it happens very predictably, very systematically, very cyclically, right? When that happens, you're going to end up in a worse position. So what happens is, if you can save before you invest, you're going to build the financial foundation of your life. That way you can then not just save before you invest, but save with the intent to invest. And when you do that, what happens is life insurance allows you to create what we call arbitrage, meaning if I could earn 5% on my money and pay 3%, to leverage that money at 3%, that's creating a 2% arbitrage, right? And so now when we take into another asset into consideration, let's call it real estate, because I know this is a really common way. It doesn't have to be real estate, but for the sake of conversation, real estate's a very common asset to leverage for this. And it's one of the reasons I wrote the book Cash Flow Hacking, because I think real estate is actually the best way to do this. So when you look at real estate in this situation, if I could show you a way that you could save in an account, and that account would be earning, let's say, 4.5%, and over a long period of time, let's say a 20-year internal rate of return of, say, 4.5%, and then you could borrow against that, and you could leverage that money and pay 3% to access it. You're going to earn 1.5% just on the spread. But now, on top of that, what's going to happen is you're going to have an asset with real estate that you're going to have appreciating. And if you rent it out and you get cash flow from it, and they're going to pay down your mortgage, and it's going to increase your cash flow, and all these things that are going to be happening. I don't have time to get into all the details on how that works, but if you're into real estate investing, you know what I'm talking about. When you go down that path, that's how it gets to create wealth for you. That's how whole life insurance creates wealth for you. Because if I could tell you how many people I talk to every single day that are saying, I want to get into real estate. I wish I'd have gotten into real estate 5 years ago, 10 years ago, 15 years ago, but I just never did because I didn't have the money. I didn't save. I didn't know how to save. I didn't know where to save, all these different things. This is a systematic process that can get you where you want to go. Saving into a whole life insurance policy, to me, it's a savings account on steroids. It will be your emergency account. It will be your opportunity fund, and it will set you up for success because it's going to give you a set of rules to operate through. And then when you want to actually take risk and invest, you can leverage it and create arbitrage, because that 1.5% hedge in the example that I gave you, right? That's either going to make whatever return you get in real estate or any investment better. It's going to make your return better. If you had a 10% return, you're going to have 1.5% return effectively higher than that. So think about it. That's a 15% improvement. It may not sound like a big deal. It's a massive deal when you compound these numbers over a long period of time. It's a huge, huge deal. So when you look at that, it's either going to make your return that much better, or if you happen to pick the wrong investment and you make a mistake and you lose, it's going to hedge your losses, right? It's going to reduce your losses by that 1.5%. So that's where the power is in this. So if you have any questions, any comments, go ahead and leave them below. If you haven't already, make sure you hit that subscription button, hit the bell, that way you get notified every single time I launch a video. And I look forward to seeing you on the next video. Please just think about this, because this is one of the most misunderstood products on the face of the earth. And unfortunately, most people in the life insurance industry don't even understand it. So keep the education going. I'm going to have a video for you and a playlist for you at the end here that you can keep this journey going. And make sure you click on one of them. Till next video, have a blessed, inspirational day. We'll talk soon. See ya.